Hello traders and welcome to another video review. Today is Monday, December 15th, 2025. Let's take a look at the Forex economic calendar for today. So what do we have here? Asian session was full of data. First data were from Japan. Tankan big industry, CAPEX more than previous number, better than the previous number, 12.6%. Tankan big manufacturing outlook index 15 points, large manufacturing in line with the expectations 15 points, and 34 points just a little bit below the expectations. And Tankan large non-manufacturers index. So pretty nice data from Japan. China industrial production down from 4.9 to 4.8, missing the expectations of 5%. The same situation of the fixed asset investment going down even lower. Industrial production 6%, unemployment rate 5.1% as expected. PPI prices in Switzerland deteriorate more towards minus 0.5%. We are still waiting for the CPI data from Poland and industrial production from the Eurozone, which is scheduled for release at 11 a.m. Housing starts in Canada are scheduled for release at 2:15. Then we have the New York Empire State Manufacturing Index scheduled for release at 2:30. And then core CPI and CPI data together with the manufacturing sales from Canada. And at the end of the day, we got FOMC member Williams to give a speech at 4:30. So, pretty easy day for the news macro traders. Busy day, busy Asian session. So, without any further ado, let's switch to the charts. We'll start with Euro-Dollar. Euro-Dollar 4-hour time frame chart has been seen doing the swing high at 1.1763 and then consolidating the recent gains after this movement to the upside has been temporarily paused. So in that situation, we are going to apply our upper trend line, as you can see here, because we might be seeing a bullish pennant in progress here on the Euro-Dollar. This is the higher pennant line. This is the lower pennant line, and this is the pole. So we got the pole from the lows of 1.1616 to the highs of 1.1763. That's the pole, and this is of course the pennant itself. Momentum is moving lower. 62 points is enough for the bulls to try to move higher nevertheless. So this situation looks quite bullish to me. Next target is 1.1780. British pound. The British pound is doing something else here because we got this high at 1.3437, but it's a little bit away from 1.3471, which is the next technical resistance. We got nice correction here. Let's check how big is that correction. I got my price range tool. You got this correction which is minus 0.71. Look, minus 0.72, minus 0.73, minus 0.71. Do you see the pattern? The pattern here is that 0.71 might be quite interesting. Quite interesting. A pullback. Minus 0.65 is the first one ever in this during this movement to the upside. Maybe that one. What about this one? There you go, minus 0.70. So that's definitely still the same, except the first one, the same pullback range. So we should see some sort of the upward movement continuation now. Anyone which is a bull might consider this actually, because this pullbacks looks pretty much the same. So first confirmation of the upcoming resume of the uptrend is of course breakout above first 1.3386 and then obviously the swing high 1.3437. So the outlook remains quite bullish. Momentum is down to the level of 53 points. Nevertheless, we went down from the extremely overbought conditions, so that's the quite different situation here. Bullish outlook for the cable. US dollar versus the Japanese yen doesn't actually look too bullish in this time. This situation here looks more bearish, especially after consideration of the RSI, which is at the level of 37 points. If we break below the Friday low at 154.96, then the next target is swing low from the December 5th, 154.36, and this violation most likely would put this level here, 153.61, to the test, right? Only a sustained breakout above the 100 periods moving average and then above one of these technical resistance levels is a little bit more bullish than it is right now, but definitely we need a breakout above 156.96 to call it a bullish trend, uptrend resumption, and a bullish bulls controlling the market. Otherwise, it looks like the market wants to dig a little bit deeper. Gold is narrowing the all-time high yet again. The Friday swing high at 4,353 is very, very close, and the all-time high at 4,376 is even closer. So momentum is strong, momentum is positive. We should see another attempt of the gold to break above this swing high, 4,379. 79, or there's something more? There's 80. Yes, 4,381. This is the swing high. Any breakout higher is bullish. Look at this. We entered the extremely overbought conditions yet again. So we might see market resumption after this. There is a breakout done, but it might not be that big as we think it might be, right? So curb your enthusiasm. Bitcoin, 4 hour time frame chart of the Bitcoin is doing great as far as I can see. Let me just fix this trend line. So you can see here, this trend line is apparently working again. So look at this. We got this low here, test of the trend line, and bounce. The market is moving higher towards the level of 90,584, which is the 100 periods moving average on a 4 hour time frame chart. Fine, we almost hit the extremely oversold conditions. Fine, nice rebound, V-shaped rebound here. Any breakout above the 90,584 is bullish. Next target is obviously at the range high, roughly around 94,395. Obviously there is still some room to the upside, but upside is limited by the supply zone, the same odd supply zone that the bulls need to test and maybe break above this zone in order to continue higher. 98,312, 99,000 dollars. This is the zone, quite a narrow zone. Nevertheless, it is still very important zone, very important level. So please stay focused, stay vigilant, as we might see test of this zone unless we fall out of the channel. That's the first invalidation of a possible bullish resumption, or there will be a problem from the last week high, 94,595, right? So please stay focused, stay vigilant. Let's see what the trading day will bring us. Thank you very much for watching this analysis, and I hope I see you guys next time. Take care and bye.